let's do a bit of a recall where we see that the federal government some time ago, said in September, President Bola Tinubu said his administration will stop borrowing domestically from banks, arguing that such loans were squeezing credit available to the private sector. He also announced that the government had met its non-oil revenue targets for the year, projecting a shift towards sustainable revenue generation. However, just a month later, fresh reports show that the government has returned to the domestic debt market, of course, with this story that we've just seen now. Joining me to further discuss this and the happenings on the NGX in the last 2 days is Muktar Mohammed, his CEO, Finance with Muktar, joining us from Lagos virtually. Good morning, and thank you for joining us on the program this morning.
Good morning for having me. Thank you.
All right, now before we delve into this conversation, let's go to something that broke this morning, that 15% importer duty that has been halted so far. What's your take on that?
I just think that policies should be thought through before being implemented. You can't just overnight you make a critical policy like that, and the next 24, 48 hours or 1 week after, you are back to say such policy has been suspended. I think it's becoming too much of this government in terms of policy somersault. It's not good for investors. It's not good for the overall economic climate. I don't think it's the right thing, because what has changed within the past 24 hours? Or be within the past 1 week that you came up with that recommendation. You say you made that recommendation because you feel that you want to take the Nigerian first policy to the oil and gas sector, and then we are back now, and you are saying you don't think that policy should see the light of the day. I think it's not good for our economy. I don't think the policy was thought through. But again, I don't want to say the policy is not good. But again, if you are going to come up with a policy and you are not sure of the mode of the operation of it, whether you have the capability to ban put 15% on petrol imports, and then you don't have enough to supply, because again, that means you're trying to tell us that maybe Dangote cannot even meet the domestic suppliers agreed. So for me, it's a big challenge. I think government should be careful when they come up with policies.
Okay, so does it equally mean that maybe due diligence isn't necessarily done when these things come to, as you've said, you say something today, tomorrow you're rescinding it, and this is like the second time we're seeing something like this happen. They came with a fuel tax surcharge a few weeks back, then after an opera, they took it away. They came with the FOB 4% levy, and after some opera, they took it away. So doesn't this speak to the lack of consultation with the people involved in these sectors?
Exactly. You just said it all. I think there's nothing to say, because again, in terms of this government, I think what they do is that they come out with it first before they consult. They don't get the relevant key holders to have consultation with them to ask of how would this policy works, how will this. I'm sure I'm just short of words, because again, like you've said, it's recurrent. It's a recurrent happenings all over in terms of government policy, especially economic policy. Now, what of those that have paid that 15% tax within the past 1 week in bringing in import petroleum product? Are you going to return it back to them? What are you going to do? So that does not give investors confidence to want to come to your economy. Because what investors are looking for to come to the economy is policy stability in policy, not just today you do this, tomorrow you do that. I think for me, they should have learned their lesson. There are a lot we can go on and on of policy they've brought in, and up to this moment, I don't think they realize what the Nigerian economy is with petroleum products. Because if you look at all these issues that you have just pointed out, it's largely driven by products, inability for them to really know the importance of the petroleum products to the life of the ordinary Nigeria and to businesses in Nigeria.
Okay, So now let's go to our conversation for the day, which is mostly on the happenings on the NGX in the last 2 days and the Senate. However, we've already prompted the Senate conversation by playing, that's a borrowing conversation, by playing that report. So we'll start off from that, then we'll go to the NGX happenings. Now, we've seen the president has come again in order to fund the deficit in the budget, which, in case people are not aware, the budget size was 59.99 trillion naira and the deficit was 14.10 trillion naira. That's about approximately 4% of the GDP. Initial borrowing plan was 12.95 trillion naira. Now the additional borrowing is now this one has happened at 1.15 trillion naira, and it has revised the total borrowing to 14.10 trillion naira. Now, so far, domestic borrowing is making 61% of the borrowing that we have done for this budget. But what does this tell for a government that in September says they are done with the borrowing and that they've now made so much in revenue from non-oil, and just like say barely a month or so after, we're here again coming to borrow domestically? What does that really foretell for the economy and the stance of the government?
This is what the late fella Nicola Kokuti will call government magic. So we are seeing magic now. Today we are hearing this. Tomorrow we are hearing this. We will never borrow again. We have enough. Revenue is better. We've been able to improve revenue, and we see these numbers every day when they tell us revenue has improved. It tells us the number. FIRS say they have improved revenue more than what they have ever done before. So it's for me it's a shocker to whatever we are seeing in terms of what the government is trying to do. It seems to be there's lack of coordination, either in knowing what they have and what they have to do, and you can put this to the doorstep of the Minister for Economy and Finance, because again, you need to plan your way through. He's the one that gave the advice to the government. For me, I'm not surprised because if you look at oil benchmark, oil output, everything is different. Oil benchmark has come down from their targeted $75 per barrel to about 60, 63, 64, $65 per barrel. So they already have a shortfall of $10 per barrel. So definitely you know that they will have a revenue shortfall. So, and again, the majority of the budget was likely to be funded by oil revenue. So once oil revenue comes down, definitely you expect what you are seeing now. It shouldn't be a shocker to anybody if what we are seeing now, if you are an economist, you look at the numbers that there. So then we've seen them build budgetary allocation based on 1,500, $1 for 1,500. Yeah, even if we are doing 1,450 or thereabout, we just started that just a couple of months ago. So definitely that also have an impact on their revenue. Crude oil output was supposed to be 2.06 million barrel per day. We just heard from OPEC of recent telling us that our oil output as it stands today is still the highest in Africa, but yet we've not been able to meet our OPEC demand. So all these are a pointer to the government not having been able to meet up with their economic policy, and they have to borrow. Don't forget, they are also doing the Eurobond, which is also part of borrowing, and also domestic bond in terms of domestic borrowing for the FG bond and others. So definitely, again, we have to look at it that maybe the government knows they've not been able to meet their projection, basically, and they are forced to eat their word to come back to the capital market. That's all I can say.
Stop the domestic borrowing was because it was hampering access to the private sector, credit to private sector. Now, with this move that has been made, what impact would it have on credit access to the private sector?
What it means is that if you look at the financial reports of the banks, you realize a lot of the banks are rather borrowing to government and investing in government bonds rather than giving to the private sector. So that has not changed. Don't forget that state government are also coming to the capital market to access funds. Lagos State is there for 200 billion naira. So definitely you could also see that they are also coming to ask for funds. So that definitely will make cost of funding high for the private sector. Like I said, if you want to see the true measure of an economy, you need to look at how much loans are being given to the private sector. Or if you look at the bank balance sheet to know how much have really gone out to the private sector, realize that the bank balance sheet profit in terms of income profit and security profit, which is largely driven by government borrowing, you realize that the banks are often more satisfied to give to a risk-free borrowing in terms of government borrowing. And that also is hampering growth in the private sector. And that will also make the recent rate cut of not so much significant to the private sector, because all the money that the private sector will be able to borrow, they will also have to borrow at a very high cost.
All right, now, what will this addition now do to our domestic debt? And let's equally look at the fact that the MPC meeting is going to take place this month. That's the last one for this year, sometime towards the end of the month. Will this in any way have any impact on the outcome of that meeting? And what does this actually do for us as a country? How will it influence the domestic bond market?
Well, for the domestic bond market, that will be positive. Let's start. That means they will have a wash of liquidity. But that also will depend, like you said, what the CBN will do when they meet. If the CBN is bringing down rate again, what it means that rates in the domestic market will also naturally come down. And so definitely, but if CBN is going to hike rate again or leave it as it is, there will still be a lot of activities in the domestic market, then rate will remain as it is. But if CBN were able to bring down rate, then the domestic market will definitely feel the impact of that bringing down of that rate. And so some of those funds will also begin to look for that safe haven for high returns. That's what I think will be the impact on the domestic economy. It all depends on what the CBN will want to do. But if I am to follow the antecedent of the Central Bank of Nigeria as it stands today, I still think they may not drastically cut rate. They might just leave it the way it is for this year to end, going into next year. Don't forget that next year is always an election year. Also, there will be a lot of movement of liquidity, cash from point A to point B. So they will look at all this before they will begin to make up the decision. But for the bond market, it's positive. And like I said, the federal government bond is there. We are now having state government bond, though we are not having private sector bond. And private sectors have also decided to go the other way. Instead of going to the banks to lend because of the high interest rate, they are beginning to patronize commercial papers to bring down the rate of cost of fund. So you will see everybody begin to make up strategy on how to move forward and also how to grow their own sector through in terms of funding.
All right, our last question on this particular conversation before we move on to the other one is, with this number from I said earlier, 61% of our borrowing is domestic. How will that impact the way foreign investments? How will that since we're more reliant on domestic borrowing, what's the look it gives to foreign investors out there?
Oh, well, it's also give confidence that we are owning the economy. That is, the locals believe more in their economy. So that will also want to push foreign investors to want to say, okay, we also want to be part of this, because that means the locals are more or less investing in the economy. But again, the foreign investors will also look at the risk impact of the economy as it stands now. And don't forget that we just did the Eurobond, which the rate went high because of the risk impact by the utterances from President Trump. You saw how that rate has to go up because of that. So definitely, it's good when you have more in terms of domestic borrowing than foreign borrowing. Remember, again, foreign borrowing also comes with their own challenges. It's an FX borrowing. And so when it's time to repatriate this money, then you see the demand for FX goes up. that means the supply is low. That means the exchange rate will be high. But we don't want to be there. So once you make it feel that your domestic people have more confidence in your economy, I think it gives more confidence for the foreign investors to want to come in at a very lower rate.
All right, now let's go over to the happenings on the NGX. On Tuesday, we saw what happened there, 4.6 trillion lost in one day, the highest in decades. But it's turned over. Wednesday, 2.6 gained, just about 2 trillion naira short of what was lost on Tuesday. Now, first off, let's look at what could we say brought about those declines, that fall in that loss on Tuesday. Some people are citing the CGT as the reason why some people, of course, is going back to Trump's utterances from weeks ago. They've been pulling out, actually, before then, for like a straight week. The NGX had been closing in the red for a while now. But for that Tuesday, what could we say was the real reason or the real reasons behind that major loss?
Sometimes it's not easy to pick a particular reason for the market fall, but you can also look at the main reason for the market fall. Now, what you need to look at seasons like this, between the month of October to November, we always see the market, this trend in the market, a bearish trend in the market. And this is due to portfolio reshuffling from investors trying to move their fund from one area to the other, and trying to look at the year end when this result will come out, which company will be paying good dividend, looking at dividend yield and capital appreciation. That is one. But that is one of the reasons that is responsible for this from that you saw. Secondly, again, you have talked about the utterances from the American president. For me, the utterances for the American president, be me as serious as it is, you have to look at where the target was supposed to be. The target was supposed to be the terrorist enclave, and in that terrorist enclave, we don't have any major company that stop operating in that area that is listed on the NGX. But again, what really happened was the response to the utterances by the presidency and some government official was more militant in terms of confrontational rather than looking at the diplomatic channel and how events like this are being handled. So that sends spies spend around investors, and investors begin to panic that if such things happen, that means they will get trapped here. That is the second one. But the major one you cannot disconnect. The capital gain cash was really, really, really an issue. I can tell you it was a big, big issue. Because again, you are looking at not that they don't want to pay, like putting that spot, but this is a sector that has not paid tax. And when you are coming in to tax that very sector, you are not taxing 10%, you are taxing 30%. So that it was huge. That is one. Then we have the retrospective type taxing, which was a decision whereby I have held this share for the past 20 years, and you are not telling me that I will pay capital gain since I've held that share. That did not bring clarity to investors. So what we saw was that a lot of investors were selling off their holding in order to, let me enjoy my capital gain and then come in January and then let them begin to tax us based on the gain that I would do in January, rather than taxing me with my overall gain if I've held the stock for 20 years, for 10 years, and what we did modality. So for me, that was the major challenge that we saw in the market, was the capital gain tax that really set the market bleeding.
Okay, and of course, after the utterances from Taiwo Oyedele, we can see that as of Wednesday that the market rebounded, and 2.6 was gained again. Hopefully, by the end of today, we'll see more positive news on that front. But away from that, what more could we do to help keep the NGX stable, where this sort of things? I know utterances are powerful. We can see that with the effect it has on the NGX. But what could we do? What are the things we can shore up to see that these things don't happen, where it pulls us, and has a very major hit on us?
Clearancy, we must be clear. Clearancy, be very clear in terms of policies, especially the capital market. because it's a barometer where the international investors look at your economy. And so there must be clarity if you want to come up with a policy, especially any policy that has to do with taxation. Globally, that is a major challenge for every business. Every business in one way or the other is looking at how to do tax avoid and not tax invasion. So when you come in with things policy like this, there must be clarity. Like you said, he came up with clarity and said, no, it is not retrogressive again. It will start from January, whatever you gain, that is what will be taxed. And again, the Minister of Finance said they are going to look into it. This morning, we heard the Senate also have come into it that it should be suspended. You see, it just brings us back to what you said when we started. Why is it we make decisions without carrying the key stakeholder along? And after we have brought out the decision, and this decision has been signed into the law, you are coming to meet the stakeholders for their input, and then you are saying, okay, we'll see what we will do. That is not good. The capital market is a market that is driven by information. Whether those information are accurate or not, the investor will need to design those information. And that was what we have. So for me, clarity should be one thing. Policy to the stock market should be towards creation of wealth for your own citizen and also for those that will be having access to the market, the companies. What I mean that is that in developed countries of the world, what they have done thus far is to make sure that when it comes to policy on taxation in the capital market, there are different parameters. If I hold a stock long, why I am free from capital gain tax, even if I'm going to pay, it will be minimal compared to the person that is a trader that is ready to hold for just for 2 months, 3 months. He pay more taxes. Those are the type of policy they should be thinking in how to help the market. Look, whether we like it or not, the only bright light of the tinubu economic policy thus far has been the capital market. So you must be careful if you are coming up with policy that will kill that sector of the economy that is the key driver of your $1 trillion economic vision. So policies should be thought through, especially when it affects the capital market. Like I said, investors are watching. They look at your policy from the capital market to determine whether they want to be just portfolio investors or institutional investors or foreign direct investors.
Okay, thank you so much, Muktar Mohammed. It's always a pleasure having you, sharing your insights with us this morning on the happenings on the NGX and the domestic borrowing that just happened recently. Thank you.
My pleasure. Thank you for having me.
And that was Muktar Mohammed, CEO of Finance with Muktar. We've been talking about the recent happenings on the NGX floor, where we lost 4.6 trillion on Tuesday, but we've gained about 2.6 back again on Wednesday. Of course, renewed domestic borrowing by the federal government, with the Senate approving 1.15 trillion naira to fund the deficit of the 2025 budget. That's the much we have for you on the program this morning. I've been your host, Chiamaka Nwanfor. Same time, same place tomorrow. Bye for now.